Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to uncover the real story. Today we are diving deep into Spirits Time International Incorporated's Form 10. And let me tell you, this filing is a masterclass in how a company can navigate having, well, almost precisely zero operations. Get ready because we are about to decode what this means for the company and its investors. So what exactly is Spirits Time International Incorporated? Well, as of the 31st of December 2024, they are essentially a shell company, meaning they do not have significant assets or liabilities and no ongoing business operations. Their history is quite a journey, starting in oil and gas, but pivoting to marketing tequila products that also did not pan out. Now, they are in a phase of seeking and investigating business opportunities to acquire or merge with. It is a company with a very limited operating history, frankly none at all. Right now, a negative working capital making its future very uncertain. This is confirmed right here in their filing where they explicitly state they are a shell company, yes, marking that box with a big fat check. This tells us they are not actively running a business but are more like a vessel, looking for one. Think of them as an empty shopping cart at the grocery store waiting to be filled with a business idea. Let's look at their stock. As of the 12th of February 2026, they had about 7.5 million shares of common stock outstanding. The par value is a tiny fraction of a penny, which is pretty standard. The market value as of the 30th of June 2024 was just over $2.6 million based on a closing price of $2.3. Purse hair. However, you will see that the stock price has been extremely volatile, trading as low as $0.0002 in early 2026. It is a risky environment if you are an investor. Now let's get to the meat of this report, the financial tables. This section usually gives us the inside scoop on how the company is doing financially. And for Spirits Time International Incorporated, it confirms what we suspected. They have incurred losses since their inception and have no ongoing operations. This has raised substantial doubt about their ability to continue as a going concern. For the year ending the 31st of December 2024, they reported a net loss of $451,328. This is an improvement from the $472,518 loss in 2023, but it is still a loss. Their accumulated deficit is a staggering $2,880,196. This means they have spent way more money than they have brought in since they started. Their working capital, a measure of their ability to cover short-term debts, is also deeply negative at over $1.3 million. This cash situation is precarious and highlights their reliance on external funding. The auditors themselves are very clear about this, raising substantial doubt about the company's ability to continue as a going concern. This is a serious warning, flagging that without new funding or a successful business acquisition, this company might not be around for long. They have very little cash on hand, currently just $2,377, and that is after some financing activities. Looking at their cash flows, we see that operating activities used $65,671 in 2024. This is largely due to their operating losses offset by some non-cash stock-based compensation. Investing activities were zero in both 2024 and 2023, which is not surprising given their current state. Financing activities did provide some cash, with $67,555 coming in during 2024 from loans. This is the lifeblood of a company. In this situation, they are constantly looking for money to keep the lights on and to fund potential acquisitions. A significant part of their liabilities are loans from related parties. They owe over $314,000 in principal plus accrued interest on loans from parties that seem to be connected to the company's management. They also have convertible notes payable to related parties with a balance of $55,000. These notes are in default since March 2015 and accrue interest at a hefty 12% per annum. This is a common way for shell companies to operate, often secured by the founder's own money or that of close associates. Interestingly, they have issued preferred stock, specifically series of preferred stock. On the 17th of April 2024, they issued 200,000 shares of this series, a preferred stock for services rendered valued at around $534,600. This is a massive issuance for a company with no operations. It signifies that they are paying for services with stock, which is a common practice when cash is tight. They had 650,000 shares of Series A outstanding at the end of 2024. They also have Series D preferred stock outstanding with a very interesting feature, each share carrying 10,000 common votes. This kind of voting power in a small company can give significant leverage to the holders of these shares. A key event is their default on a promissory note. Back in April 2019, they received a demand letter for defaulting on a note worth about $300,000. While they are accruing default interest of 24%, they are claiming they are not in breach of other terms. However, in April 2024, they amended this note. The total outstanding amount became $339,023 with principal of $290,000 and accrued interest of about $49,000. They agreed that this entire amount will be exchanged for securities in their next qualified offering of at least $3 million. This means the lender is essentially waiting for the company to find a business and raise significant capital before they get their money or an equity stake. Looking at potential future share dilution, they have convertible debt that could turn into over 3.8 million shares of common stock and series of preferred stock that could convert into 6.5 million shares. This is a lot of potential shares which can significantly dilute existing shareholders when and if these instruments are converted. So what is the story here? Spirits Time International Inc. is a classic shell company. Its main goal is to find another business to merge with or acquire. They have no current operations, no revenue, and are heavily reliant on loans from insiders and external financing to stay afloat and maintain their reporting status. The risk for any investor is extremely high. They are betting on management successfully finding and integrating a profitable business. The financial statements show a company struggling to survive with a large accumulated deficit and a serious going concern warning from their auditor. The recent debt restructuring and stock issuances suggest they are actively trying to manage their liabilities and fund their search for a new venture, but the path ahead is far from certain. In conclusion, Spirits Time International Incorporated is a company in transition, a very precarious transition. Their strength lies in their status as a potential acquisition vehicle for a private company looking to go public, but their weakness is their deep financial hole and lack of operating history. The key risk is their inability to secure adequate funding or find a suitable business opportunity. A clear takeaway is that investing in such companies is highly speculative and should only be undertaken by those with a very high tolerance for risk who understand that their entire investment could be lost. Alright, that is our deep dive into Spirits Time International Incorporated's 10. What do you think about their strategy and the risks involved? Let us know in the comments below. If you found this breakdown valuable, give this video a thumbs up and subscribe for more corporate insights. And do not forget to join our Discord community linked in the description. Thanks for watching, and we will see you in the next one.